Hi guys, today we are going to learn production cost. This is one of the important part of your syllabus. This is tested on question number 6, Roman number 2, most probably. So we're going to go deeper into this, but we are going to do 3 years past paper. So I wanted to teach you each and everything thoroughly. Before that, you need to know something called formulas. These formulas, if you remember, then of course doing the sum is not that hard for you to understand. And also, guys, please do not forget to subscribe our channel to learn more videos. Let's move on to the content. You have prime cost, you have direct material cost, direct labor cost, and other indirect cost. If you add all three together, you will get prime cost. When it comes to indirect cost, we can also say it as production overhead. Production overhead is combined of three contents, which is indirect material, indirect labor, and other indirect costs. So you might ask, what is direct material, what is direct labor, what is other direct cost? I'll give you a small understanding about these two terms. So if it is production overhead cost, it is indirectly related to the production. Any type of cost indirectly related to production, we say it as production overhead. It can be when it comes to indirect material. If you are going to run a bakery, then of course indirectly what are the things you need to make that material moving forward. That's what we say indirect cost. But if you take direct material cost, now example, if you are going to run a bakery, the main ingredient is the bread. So if you are going to put flour to make the bread, we say it as direct material cost. But when you are packing the bread into a polythene paper or polythene bag, we say it as indirect material because it's indirectly affecting the production. So the same way, indirect labor cost is the person who is involving in the production. Indirect labor is the person who is just supervising the production. Other indirect costs can be transport here. Other direct costs can be like royalty payments. You need to pay some sort of franchise amount to another company, or some sort of related payment you need to pay as commission when you produce something. Or you would have taken a place of someone and you need to pay. Maybe you have purchased a brand or something, you need to pay them. So that's what we say prime cost. So then we move on to total production cost. You have two types of contents in total production cost. When you have all the direct costs along with the indirect cost, if you add both together, we say it as total production cost. We say it as prime cost, or we can also say it as total prime cost, or we can say it as production overhead cost. When you combine both indirect total, direct total, you will get total production cost. So how do we find out the per unit cost of your syllabus? Per unit cost is like you need to know what is the actual cost of one unit. So when you are taking the cost of one unit, you need to take the total production cost, which is prime cost and production overhead cost, and divide it by the number of units. So you'll be able to find out per unit cost. And keeping profit margin is the last topic which I want to teach you before we move on to determine the selling price. A selling price will have unit cost. Unit cost is like we found already total production cost divided by number of units you produce. So per unit cost plus unit profit margin. They might give example. They might give you paper. 100 rupees is the cost. Now I'll give you 100 rupees is the cost. So they'll say profit margin is 50%. Okay, on cost. So now how are you going to determine your selling price? Very easy. 100 into 50 over 100 is 50. So this is your profit margin, 50 rupees margin. Okay. And you have another things. Another thing, what is that? 100? 100 is your cost. So 50 plus 100 will give you the selling price. So selling price will be 50 rupees is your margin plus 100 rupees is your cost. So you will get 150. So I hope you understood the basic formulas before we move on to the unit. Let's not waste our time. Let's start our past paper. So 2018 question number 6, Roman number 2. It's a 2-mark question. They're given here following up your information of Sandal's business which produces almirahs for the month of November 2018. Cost of timber is 100,000, monthly electricity bill is 2,500, wages of carpenter is 60,000, other direct expenses is 17,500, rent of carpenter shop is 20,000. Number of almirahs produced during the month of November is 5. Selling price of an almirah is rupees 50,000. To do this, you can't only memorize the formulas, you need to have a logical mind to think. And also, understanding with a logical mind is very important to score in this area. So required prime cost for the month. You already know prime cost means direct. What are the things? I'll remind you again. I'm going to do this sum with you guys. How does the prime cost is made? So I'm going to do A here. So here we are going to start the sum at this point. Cost of timber is 100,000. So this is direct material. We'll find out all these three costs plus direct expense, direct labor, And you need to add another thing to get prime cost. We said as direct other expense. Okay, direct other expense. Direct material is how much you got here. It's 100,000. So I'll write here 100,000. So this is how your prime cost is made. And your direct labor, they are given wages of carpenter. They are the people who are working on making almirahs. So they will be added for 60,000. And then we have other direct expense. They are directly given 70,500. So total prime cost is we can conclude 177,500. So always remember to put a comma. Okay, so that makes the examiner easy for you to him to see it. Then we move on to the next point. We have profit, selling, and almirah. So how do we find the profit, selling, and almirah? First of all, we need to know the total cost of one product. Before that, now here they have given, there's a small problem on this question because it's very tricky. They are given the total cost of all 5 almirahs. If you see here, number of almirahs produced during the month is number is 5. So and also they're saying this is produces almirah for the month. So this is the whole cost. So you need to find one almirah's cost of one almirah in order to find the profit. Now here how much they are given prime cost 177,000. Let me find first of all find production overhead. We'll find production overhead. Very easy. You have other direct cost you can take. 2,500 is other direct expense. Then of course you have rent of carpenter shop is also other direct expense. I think that's all you have other direct expense. So you will take 2,500 and 20,000. 2,500 plus 20,000 will give you 22,500. So this is the total of production cost. Now to find the total cost, total production cost. So you got production overhead. Now you need to find total production cost. In order to find the total cost of one almirah, I will take prime cost and production overhead as per the formula which we learned now. This is in total of prime cost. Always apply the formula when you do the sum, so you remember. And also you have production overhead. So you got production overhead. Now let me remind you, your prime cost was 177,500 plus, right? 177,500 plus you have 22,500. So in total you will get 200,000. So this is your total production cost. Now we have found the total production cost. What we need to understand, we need to find out the actual cost of one almirah. So now this is 5 almirahs. This 5 almirahs cost they are given 400,000. I'm going to find one almirah cost 400,000. I'll divide by 5 to get one almirah cost. So one cost per unit might be 200,000 divided by 5 is 40,000. Now the question is profit, selling, and almirah is the question. Now how are I going to find the profit? Let me say they are saying the number of almirahs produced in the month of November is 5. Selling price of an almirah is rupees 50,000. So 50,000 is your selling price. The cost is 40,000. And of course, it's easy for you to find the profit. How do you find? I'm going to find the profit. I'm going to take my selling price, right, and deduct my cost per unit. So we have found already the cost per unit, which is 40,000. I'm going to take my selling price 50,000 because they are given here, and I'm going to deduct the 40,000 in order to get the profit. So profit is 10,000. So that's all for 2018. Let's move on to 2017. Question number 6, Roman number 1 and 2. Name the elements of production cost. It's very straightforward. You can say direct cost and indirect cost. And indirect cost. You can also say it as a manufacturing prime cost and production overhead cost. Then we have some information of Shakti's business, which produces concrete blocks for the month of August 2017 as follows. The given cost of concrete block is 30, production overhead is 20,000, total production cost is 60,000. I have put a note for your understanding because prime cost plus production overhead cost will give you total production cost. Direct material cost is 15,000 and other direct cost is 10,000. Now we need to find out number of concrete blocks produced during the month of August. If we wanted to find the number of concrete blocks, I need to use the unit per cost formula. So we'll apply the same formula. Unit per cost, how do we take? Total production cost divided by, we divide it by number of units. Right? Now I do not know the number of units, but I know the unit per cost. So what I will do, I'll bring the number of units this side. Then I will take total production cost into cost. I will divide it by unit per cost. Now number of units I can easily find out. Total production cost, I can find out number of units easily. So let me find out it for you. Total production cost, they are given here 60,000 divided by unit per cost is how much? 30 for one concrete. So 2,000 concrete block is what they have produced. I hope you understood the A part. So let's move on to direct labor cost for the month of August. How do you find the direct labor cost? It's very easy. You need to know the total production cost. We'll write first of all that. How much is total production cost? Is 60,000. I'm gonna remove my production overhead cost. If I remove from total production cost my production overhead cost, I will get my prime cost. Okay, so I will remove total production overhead cost. It is 20,000. So I put a bracket. I'll get an answer 40,000. So this is the prime cost we have actually. Now we need to find the direct labor. So how do I find the direct labor? It's very easy. You need to understand one thing. If I get prime cost, I need to remove from prime cost to actually get the direct labor. There are three things in a prime cost: direct other material cost, direct other expense, direct labor, and direct material. Right. So if I remove direct material and other direct cost, I can get direct labor. So I'll remove direct material cost. How much direct material cost? 15,000. Put 15,000. Always put in brackets when you do this calculation. Then we have other direct cost minus 10,000. Right. Then now I'm gonna get direct labor. So if 15,000 my and plus 10,000 is 25,000. So if you deduct from 40,000, 15,000 and 10,000, you will get 15,000. So direct labor cost is 15,000. This is how you find out. So that's all when it comes to 2017. We have done that question also. It's that straightforward. 2017 question number 6, Roman number 1 and Roman number 2. So let's move on to 2016 question number 6, Roman number 2. I'll zoom a bit for your good clear vision. Let's start this example. And there is a profit margin. It's a very good sum. So let's move on to the sum directly. So we have some of the information of a business which produces the same type of power vases. For the month of May 2016 are as follows. Unit of production 100. Direct expenses 30,000. Transport expense of flowers 5,000. Production cost per unit 400. Selling price is determined by retaining a 25% profit margin on at cost. I hope you remember the formula sheet where we learned how to add a percentage for the cost. Now let's start production overhead cost for the month of May 2016. How do you find out production overhead cost? So let me put it here. Production cost per unit they are given 400. So if I take 400 into 100, how much I will get? 400 into 100, I will get 40,000, right? So this 40,000, we will be able to find the production cost by taking 400 into 100, which is total production cost. We get 40,000. But now this is total production cost we have found out. We wanted to find out production overhead cost. So total production cost, we found out 40,000. Now I'll apply the formula. You all know that total production cost has two components, which is prime cost and production overhead cost. So I can write here total production cost TPC is equal prime cost PC plus you have production overhead cost. Now I know production total production cost is 40,000. I need to know what is my prime cost. What are three things in prime cost? Direct material, direct labor, direct other expense. Now, if I see here, they have given me direct expenses 30,000, but direct material they have not given. So this 5,000 should come under indirect cost. It is not a direct cost, so we can't take this. 400 we can't take because it's cost per unit. So this 30,000 is the only answer I can consider as prime cost because they have not given direct labor and direct raw material. So I'll consider 40,000 as total production cost and prime cost as 30,000. Then I have production overhead cost. I can write production overhead cost. POC. Now this 40,000 minus 30,000 will give production overhead cost. So 10,000 is the actual answer for production overhead. So we found out production overhead cost. Now we are done with that. It's very straightforward. If you know the calculations, if you know how to apply it, then of course doing this sum is very easy. Then we are moving on to the B part. Now this is A part. Selling price per unit. They are saying that they are keeping 25% profit margin on the cost which you sell. So that's how you need to take because they're saying that profit margin and cost. So let me move on to the B part answer. As they're given, it's very straightforward. I can find the production cost is 400. I'm going to keep a profit margin 25 over 100. So I will get 100. So this is the profit I'm going to keep. What's my cost? Actually, my cost is cost per unit plus profit will give me selling price. Always remember to write the formula. Selling price. Cost per unit is 400 plus profit is 100. My selling price is 500. So this is my actual selling price. There's another way you can also implement. This is one method which I taught you. The second method to use this 25% formula, it's like a direct way to get rather than finding the profit and calculating. You can directly take cost into, now 25% was the margin, 125 divided by 100. You will get still 500 selling price. So this is another way to find, cost is 400 into 125 divided by 100, you will get the same price which we found now. So this is another easy way to add the profit margin towards the selling price. I hope you guys understood today's lesson. If you have any doubts or anything to update in future, please let me know. As usual, see you tomorrow at the same time. Have a nice day. Please do not forget to subscribe our channel.